What we're here to talk about, what we're all thinking about, is Bitcoin as a generational investment. Of course, if we're all here, we believe that Bitcoin is a generational investment, but at Bitwise, we speak to professional investors all day, be it private banks, hedge funds, sovereign wealth funds, family offices, endowments, foundations. The list continues to grow, and we find that all of these investors think about the asset and the token and the technology a little bit differently. So we'll talk about some of those nuances today, and our panelists here have our esteemed group of panelists here, and here are the 4 chairs. Everyone feel free to take a seat. All have very different vantage points on the industry, on the asset, so we'll get into those quickly. Handing it over to Hong to give an introduction of himself, our co-founder and CTO.
Hello, great to see everyone. Co-founder and CTO at Bitwise. Started the company with my co-founder Hunter about 8-9 years ago, and we've been building a global asset manager in this space for that time. We manage about 15 billion in client assets across ETPs and hedge fund solutions and staking solutions and about 40 different products. And we're primarily in the US and Europe, and increasingly trying to explore other markets as well.
Awesome, thanks, Hong.
Hello, everyone. My name is Duke Waldrop, and I work for UTXO. I've been in the Bitcoin space for about 6.5 years now. As Lauren mentioned, UTXO is the asset management arm of BTC Inc., and we invest in Bitcoin financial solutions across the entire ecosystem.
Thank you. Hi, everyone. I'm Katie Stockton. My firm is called Fairlead Strategies. We're based in Connecticut, and we do technical analysis research, and we've been publishing on cryptocurrencies, Bitcoin, Ether, and others since about 2019. We manage an ETF called the Fairlead Tactical Sector ETF. That's a U.S. equity ETF. TACK is the ticker for that. And I'm also a CNBC U.S. contributor.
Thanks, Katie. I wasn't sure on our prep call how I knew Katie. I thought we'd met already, and then I realized she's, I think, on a weekly basis featured on CNBC running through these technicals. So very excited to have Katie here today.
Glad to be here.
Yeah. Okay, so let's start sort of at the top. Bitcoin as a generational investment opportunity is something that can get tossed around like hyperbole, I think. But again, if we're here, we all believe that is the case. So maybe we can break it down sort of from a practical standpoint, instead of just saying it is because it is. I'm curious from these investors, builders, how they think about Bitcoin as a generational investment opportunity, less tactically, more as a sort of structurally durable asset. So would love to hear from each of you on that. I think Katie has a slide we'll pull up. In the meantime, maybe Hong will kick it off for us. Or is this
Yeah, okay.
Yeah.
Great. From a technical standpoint, Bitcoin, I think we often talk about Bitcoin as an asset and a technology, but sometimes it's worth thinking about Bitcoin as really an invention. And I think that sometimes convinces people that there is something materially different in Bitcoin. And the main way to think about it as an invention is that before Bitcoin, computers did not have assets that were native to the environment. So we can pass over a dollar bill or money or gold, but we really did not have a way to pass over actual assets inside of a computer or over the internet. And Bitcoin represents the invention of that becoming possible. And it's worth thinking about that in those terms, because that really is something structurally different. And we're just seeing how that has played out for the past 15 plus years. And I think that the ramifications of computers having actually native assets is just beginning.
Love that.
Yeah, I think for me, Bitcoin, the huge wake-up call was 2020, COVID, as I imagine a lot of people in this room kind of got introduced to it. The Fed printing $3.2 trillion in the span of 2 years. There's definitely going to be some byproducts of that. effectively 40% of the M2 money supply was in 2 years. So for me, that was kind of one of the main points where I looked back and was like, okay, all this hard work that I'm putting in to earn US dollars is getting devalued overnight by someone that can just turn on a printer and print as much as they want. So yeah, I think that was kind of one of my main wake-up calls in 2020, was just really experiencing the devaluing of our own dollar. And it's something that my kids will have to really bear the byproducts of.
Yeah, so the way I look at Bitcoin is as a new asset class and as an investment opportunity that is generational by all means. I think the early stages, there wasn't the best understanding necessarily, and I can't say I'm the one that has the best understanding, but I do understand it as an investment and as an asset class. It is a trending instrument just like all assets, and here's my chart. So this is the way I look at the world. This is a Bitcoin monthly chart, and you can see over time that it has stair-stepped higher. And that's important because that shows the potential. It also shows the volatility. You can see that the stairs can be quite steep, and yet that's opportunity in and of itself, right? So we can look at the asset class from a momentum perspective, looking at it from a risk management perspective, because while it's a nice idea to buy and hold indefinitely, some people can't afford the drawdowns that Bitcoin has, and of course some of the altcoins as well. So we're there to help people navigate through these trends and through the inevitable short-term swings within that context. So we see it as a generational investment opportunity and new asset class.
Wonderful. Thank you, Katie. And thank you for putting up this fantastic slide. So we've established Bitcoin as a generational opportunity. Now we need to think about how it's practically applied to portfolios, specifically by institutions. I will say, having sat in this role for 5 years and going to endless crypto and Bitcoin conferences, there was this, the institutions are coming sort of mantra that was thrown around like, for lack of a better term, hopium for years. And that all seemed to change in January 2024 when the Bitcoin ETFs became available for private banks, for financial advisors, for my parents who aren't comfortable with anything other than a 1940 Act ETF to allocate in their portfolios, whether it be a retirement portfolio, an institutional allocation, et cetera. So now that we've sort of seen this incredible step step up in institutional adoption from sovereigns, from private banks, from the wirehouses, from hedge funds, I'm curious to hear from these panelists where the next leg of adoption might take place and what that could look like. Specifically, are we still in the early adoption phase of Bitcoin, or is this sort of a mid to late stage cycle for that mainstream adoption? Katie, why don't you take this one?
Yeah, I would say we're still early innings. It feels like an emerging trend, and I'm talking about a secular trend, not a cyclical one. So I'm really excited about the upside from here. We don't really have a way to get an upside objective necessarily from the way that the trend sets up at this time. But I think we see the trend, we see the uptrend, and what we've also seen is the liquidity, sort of the global liquidity behind cryptocurrencies, especially Bitcoin, makes it a very viable asset class for everyone from the biggest institutions down to the smallest retail investor. So I look at it from almost a liquidity perspective. And when I evaluate the charts and the trading, to me, it acts very much like another currency. You can look at it in the same way that you would look at the dollar, you'd look at crude oil prices. So we feel that the chart is very, reliable because it is so liquid and it is global. And in that way, the support and resistance levels are very reliable on the chart, and that helps us manage risk. So we think it's a great asset class for everyone, and that more and more in terms of the adoption, we've already seen very good trends there as well. And I always said that once we have that institutional adoption, I think that's where the liquidity gets even better. So I think we're almost already there but I think it's only going to get better.
It is indeed still early, is what we're saying.
Yeah, I'll add on to that a little bit. Just for reference, 2024 BlackRock, as we all know, launched their ETF, and within 2 years, they've already got $60 billion worth of assets under management. And their gold ETF took 19 years to get to $33 billion worth of assets under management. So we're definitely no longer in the speculative asset world. It's becoming institutionalized, and the rails are being laid. But kind of echoing Katie's point, it's just more of a capital inflow that we haven't seen at a scale that is definitely out there, and it's going to come, but we're still very early.
100%. I can also add a few stats just internally from Bitwise. We've seen a number of large unlocks just in the past 3 weeks. So all of the U.S. wirehouses, so Morgan, UBS, Wells, et cetera, have now approved some sort of Bitcoin or Bitcoin adjacent exposure for all of their clients. So these are financial advisors that are able to now solicit Bitcoin ETFs to their high net worth clients. This is over 13 trillion in assets collectively across these 4 firms. So very exciting. Of course, we continue to see sovereign adoption, principally right here in the UAE, where we've seen on the 13F disclosures that some of the sovereign wealth funds here have made considerable allocations, small relative to their overall pie, but large when it comes to just the institutional adoption that we need to see to continue to drive what we think will be a generational investment. So would just add that. All right, so we've established that there is this institutional adoption happening. We've established it's still early. I think it's important to think about why these investors are making these allocations. So maybe I'll turn back to the panel. Do you view Bitcoin more as, call it like a macro store of value hedge? That's of course been the dominating narrative recently. Or is it more of a venture asymmetric technology bet? Is it something else, something new, novel entirely? Maybe back to Katie for this one.
As a hedge, it's a pretty dicey hedge, at least the way I think about things. So I think the volatility is such that as much as folks can treat it as a store of value, it's a very volatile one. So in that sense, it's not a traditional hedge like you might think of gold for one. So I do feel like it's more opportunistic in the way that we're recommending it, but we're big believers in having a small piece of a portfolio dedicated to cryptocurrency investments. We also think that it's very important to be tactical, so not necessarily the long-term buy and hold, but to try to take advantage of the volatility and treat it as an opportunistic investment, ideally something that you can hold indefinitely, but we all know that, again, that momentum shifts are pretty real. In fact, you saw on the chart that there is a downside momentum shift that I think will probably make it a little bit harder to benefit from the secular uptrend, meaning that this kind of cyclical down move is something that could stay with Bitcoin some time. So I think we have to be somewhat tactical, treat it opportunistically for now, and ideally it becomes something that is a bit less volatile and becomes that store of value.
Thank you. All right, so we've talked about adoption. We've talked about why we're underwriting Bitcoin as an asset class. We'd be irresponsible to not talk about risks, of which, of course, there are always risks with anything in life, including Bitcoin. Hong, maybe this is an interesting one for you. How would you think about being the operator and founder of a large business that's made it through multiple cycles, looking out 5-10 years over the next cycle, 2 or 3, what do you think is the biggest risk to Bitcoin, be it quantum, competition with, dare I say the Q word, competition with other chains, regulatory, anything else?
Yeah, absolutely. So Bitwise does a survey of financial advisors in the US every year, and we've been doing that for this 6 or 7 years in a row. And the top risk that advisors had repeatedly said was the most concerning risk for them was the same for all those years. And number one was always regulatory risk. So at least for investors, what was top of mind every year since Bitwise has started was regulatory risk. And I think it's worth really recognizing that probably last year and this year is really when we turned the corner on that. It's still probably what people still think of in top of mind for traditional investors and professional investors. But we're no longer the point where we're talking about whether this is illegal or drug money or it's going to be banned by governments tomorrow. So I think that part of the risk has been meaningfully de-risked, and it's worth celebrating that the risk that was the top risk for investors' minds have really made a big progress on. I think that's probably why new risks that were further out in the risk curve is becoming more top of mind for investors. And quantum is something that a lot of investors are thinking about these days. But I will say it is at the point where the technical community, the core devs or developers or cryptographers in the community are starting to think of it as a risk that we should be thinking about in a 5, 10, 15-year term, not something that we're turning around and say, if we don't have a solution by tomorrow, then Bitcoin as an asset is at risk.
Which is a feat in itself versus what we've dealt with over the past few years.
Yeah, yes. I think it's worth recognizing that really the reason the quantum risk is at the forefront is because we've made a lot of progress on other things. So yeah.
Yeah, totally agree. Do we have time for another question or two? I think so. We'll run through these quickly, but fast forward 5 years. What single development most accelerates Bitcoin's adoption into global portfolios? I'm not going to give any leads on this one. On organic answers only.
Yeah, I think my opinion here is the fixed income markets. We've seen Saylor kind of pioneer this year with the preferred stocks that he's issued. There's trillions of dollars in money, pension funds, retirement funds, income funds that's sitting out there, and they've been sidelined and been unable to buy Bitcoin. I think that bid is definitely going to be there. And again, I think Saylor will continue to issue these. I don't know if they'll all work out, but there'll be other people that will come into the space and issue similar preferred. So I think that once that happens, there will be a large amount of capital that will flood the gates, and it will be probably the catalyst to the next cycle.
I would agree, actually. I think it's all about the larger institutions in the U.S. picking up this, small position, because if you just think of how exponential that would be in terms of an investment, but also a vote of confidence, and that vote of confidence would sort of trickle through the investment community. And then platform access, as somebody who traffics in public investments primarily, platform access is a big thing. So more and more to see these platforms, these big wirehouses picking up, Bitcoin as a viable asset class, I think that's going to change things. And wealth managers, heard from one earlier, are going to have to educate themselves, and it's great.
Definitely. Any thoughts from you, Hung?
Yeah, so I think it's worth thinking about last year, January, as Bitcoin's IPO moment. So when Bitcoin ETFs launched, finally you could buy Bitcoin in public markets, exchanges, brokerages, really everyone. And gold, an asset that has been around forever, had its IPO moment. GLD launched in 2003, and you would have thought that if people were waiting to buy gold in an ETF format, that they would have bought that immediately. And it was a record year, first year, $2 billion in inflows. But the thing that people miss about the GLD moment, it was the most historical kind of successful launch in history in ETFs, is that the following year, there were $3 billion in inflows. And in the following year, there was $5 billion in inflows. And then after that, it was $7 billion. The GLD had higher annual inflows for the first 7 years of its history. And so I think even this, I think people think of the kind of Bitcoin's public market moment as something that has come and passed, and we're thinking about kind of next catalysts. But I think the thing worth thinking about is that usually the public market opportunity takes about a decade to play out. And we're in the first innings of that. And so you can't buy Bitcoin ETFs in the largest banks and broker-dealers at the moment. We're talking about approvals happening in the coming months, but really, we've just seen the kind of the retail, I can buy it in Robinhood type of exposure and Schwab and Fidelity, but the truly kind of institutional and professional investors and wealth managers are just at the beginning of the adoption curve. And I think we're about to see the actual floodgates kind of land in the coming years.
Absolutely. I think we're at time. We did not prepare for this question. No pressure if you do not want to answer this question. Of course, I'm going to ask you what your 2026 price target is.
I guess
on
that's
behalf
on
of all
me.
of you.
Yeah. I'm not going to pull a Tom Lee moment here. But you
Fair
can
enough.
see from the chart, listen, the trend is higher overall. That's a secular uptrend. I do think 2026 will be a bit more of a range-bound year. So we just went from a bullish long-term outlook, having been there for some time, to a neutral outlook, and that's simply because of that loss of momentum that we've seen. We had our long-term momentum gauges were on buy signals for more than 2.5 years until very recently. So that was meaningful to us. It doesn't mean we enter in any kind of crypto winter, but it does mean it'll be maybe more of a range-bound start to 2026. We cannot predict where Bitcoin will be, nor can anyone, really. But what we can do is try to keep those trends on our side. Right now, we actually have short-term oversold indications. We even had our first buy signal on one of our models that we'd had since 22. So for now, we're looking for an up move, but that's an up move that might meet some resistance below the recent highs.
Thank you.
Yeah, I'll second a lot of what Katie said. I think Q1, I see a little bit of ranging, and then, yeah, maybe by Q2, we get back up to the 120s. But again, arbitrary. We don't really know anything. We don't have the magic crystal ball here. We're all speculating.
I might be the most bullish on this panel.
Let's go.
I think people have expected the 4-year cycle, and I think and that 4-year cycle says that this year is an up year and next year is a down year. I think people kind of front-running that expectation has really created markets to pull forward, and this year might be a small down year. And I think next year we've saved up all this energy. We made so much progress in this administration and this year in terms of Bitcoin as an asset, and that hasn't really reflected in its price. And I think that energy has been stored up, and next year I would expect us to have a big up year, 200K. I don't know.
Sounds like a generational investment to me. Thank you all for your time. Thank our esteemed panelists here. Had a lot of fun.
Thank you.